Good morning. Dornbush Download 86, Andrew and our new regular co-host, Brendan.
That's right.
In other words, Dan and Michael's run a mile. So, Brendan, you're excited to be here again this morning?
Always a jump at the opportunity.
Look at the camera. It helps you look at the camera when you're sort of pretending to be enthused. No, Brendan, thanks very much for coming along. It's great. Excuse me. So, a little bit going on even this morning.
That's right.
So, what's crossing our radar this morning?
Well, Murray Goulburn, it's sort of been hammered today. So
that's a technical term for those playing at home?
Yes, that's right.
So what's the share price down?
It's down to $1.45, is it?
Wow, so that's down about 30% on yesterday.
Yep.
And they floated recently. What was the float price?
$2.10.
So for those playing at home, Murray Goulburn is a dairy cooperative, and they've just been smacked about because of the falling global dairy price. Surprisingly seeing, I was just reading before, a fall in the demand for milk in China, which I thought was a bit odd. I would have thought that their demand would have actually been going up. It's actually falling. So on that news, the CEO has fallen on his sword. He's resigned. And I was just talking to Dan about it before he saw the camera, and we were saying the profit's still going to be about 42 million for the year. It's certainly nowhere near what the market was hoping, and the market was hoping for around 63 million. It's back to about 42 million, but we were just saying maybe around that $1.20, $1.30 mark. If they were to fall back there, it's probably not actually a bad one to be having a good hard look at, because even if they're going to continue making that $30-40 million profit, it actually looks pretty good.
That's right.
But if you got in on the float at, what did you say, $2.10? Probably not a happy little camper.
No.
And again, it just reinforces how brutal this market is at the moment, that if you're not meeting expectations, the big stick is well and truly going to be out. So anyway, we'll have a chart in there. MGC is the code, not MCG. So that's probably one to have a bit of a look at on the basis of what's going on today. What else is on our agenda?
Well, we've seen iron ore bounce back recently, so it's dropped a little bit as of last night's trade. But I guess, what do you see as your reasons behind this bounce? And
oh, you're expecting me to give you like a fundamental, rational answer?
Yeah, sure.
You obviously don't know me very well. No, in all seriousness, there's actually, and I chose those words carefully, even though it may not appear to be, because there's no rationality to the price at all at the moment. What we're starting to hear is, if we take our mind back to the Chinese stock market 2 or 3 years ago, you had all these people just madly punting because, they were just looking for a gamble, basically. And they've now got their fingers burned on shares, as we saw, late last year and a little bit earlier this year, with the falls in the Chinese stock market. The mums and dads have now got a new punting obsession. It's commodities. And so we're seeing huge volatility taking place in commodities, and iron ore is in fact one of their favourite things at the moment. And after bottoming out at around $35, $40 a tonne, it's been all over the show. I think it's about 62 or something like that at the moment. So from an Australian point of view, from a market point of view, we've seen BHP go from $14 to $21. We've seen Fortescue, like even today, Fortescue's up 5%. There's huge volatility taking place in those iron ore plays. So, I'm certainly not suggesting that you speculate or gamble, but, for those clients who are looking for volatility, check what the iron ore price is doing, because you will see that the underlying companies that have more of exposure to iron ore, like your BHPs, your Rio, your Fortescues, are moving with that volatility as well. Now, again, coming back to, there's no fundamental basis for it. There's lots of commentary around the fact that Chinese construction sort of being pulled back a little bit. At the moment, they've certainly stopped production of steel, and they're trying to, or curtailed it, they're trying to sort of get their pollution levels down, because there's a big horticultural conference exhibition about to take place in China till October. So they're trying to get rid of all the smog. So that's certainly helping a little bit as well. But there's no real fundamental reason as to why iron ore prices are up at the moment. So I'd be quite concerned, and taking a longer term view on, say, Fortescue, which is literally a one-trick pony. But if you're there trading the volatility, it certainly might be something to think about.
That's right. And you see Roy Hill still ramping up too, isn't it? Like
Yeah,
there's still more supply.
Gina's into it. She's got the hard hat on, and yeah, so there's certainly plenty of supply issues. You've also got Vale that are talking about coming and partnering with Fortescue and putting together a blend. That news hasn't gone away. So certainly plenty of supply issues. Demand is curtailed just for the short term. Demand is better than what it has been in the past, but you can certainly see that it will start falling away again post this exhibition in October. So plenty of reasons to be wary in that space.
And we've seen a investment firm from China looking at Australian financial companies. So there's some rumour about them looking at.
Where'd you see that?
That was in the Financial Review.
Today's
review. So.
And did the article mention as to who that might be?
Well, it would be the big four banks, Suncorp, Macquarie, so there's no specifics, but
they're going to have pretty deep pockets. I mean, I'll pick on CBA. I mean, you're looking at having to come up with about $120, $130 billion. I mean, that's a fair old go. But equally so, as we were saying off camera just before, there's been a lot of pressure on financials this year. And so you can certainly see, and in fact, that's just globally. You know, Citibank is in the US is trading at a P of 9 times earnings, which is incredibly low. So it's not surprising that people are sniffing around. But there is a lot of risk, and I won't go into too much because we've spoken about this for the last few weeks, a lot of risk coming into profit reporting season with banks. They start reporting next week. One, though, that we've probably been having a little bit of a look at is Westpac. Because on a risk-return basis, Westpac's probably the best one from that sort of volatility and the upcoming dividend point of view. But again, you need to be incredibly mindful that in coming into profit reporting season for any company, never mind if you're a bank, if they're going to come out with bad news, this is the time they could potentially do it. But they're equally a compelling argument that there's a lot of bad news built into the price, even though there's no evidence of bad news. And if you look at the Bank of Queensland result, it was an okay result. You look at the CBA result, it was an okay result. People are sort of, selling the rumour. Will they buy the fact? I guess we'll find out next week. Brendan, anything else that you wanted to cover off on?
All good, thank you.
Brendan, you are made for this. Till next time.